Hello, this is Joshua Hayes coming to you with the weekend stock market wrap up for BigWaveTrading.com and BigWaveTrading.net. I hope everyone had a great week. As you can see by just the stock that I'm right here on, even though it was a down week, overall I got a lot of stocks that look really good after the past week. You can see just in the past 5 days of this stock, it's up 13% alone. New York Stock Exchange, overall down 1.23% yesterday. The good news is volume was lower. However, the more important index out of those two were the S&P 500, so I'll take a look at that, and it was only down 1.14%. You can see on a slight intraday basis a little tail there, showing that it got some support intraday. The good news is, overall, is that on the down 1% day, volume is lower. So, hopefully, if we can change it a bit around again, we can go back to rising on higher volume like we were in April and falling on lower volume. And then near the end of May, as it started top, we started to get big, tall red bar days. But the green bars are still very tall. But recently, our most recent one, it was below average, well below average. And we gave back the gains of yesterday. As you can see, the open was 884 yesterday, and we closed at 882. So 2-day total now, we're slightly down. Still overall, S&P 500. Here's how I'm going to classify it. Let me go ahead and get rid of this first line right here, not the major downtrend line, but I'm going to go and get rid of that uptrend line now that it's been broken. You can see that connecting the lows of 08, cutting through the breakdown area, you can see that that's going to be a recent support level. Short-term trend is down. Sub-intermediate term, going back, you could either go to beginning of April or mid-April. It's up slightly. Intermediate term trend, I'm going to go ahead and use the March lows. For sub-intermediate, personally, March lows, intermediate term trend, I'm going to go ahead and use around November, October. And I can assume that this is basically sideways. This goes from down 2% to up 0.7%, up 4, down 6, down 5, down 7, down 8, down 12, down 7, down only 2, up, down 5, down 3, down only 1. So if we go back here, we can actually see from 1224 to 515, technically the S&P 500 has gone nowhere. And then obviously the long-term trend is very, very, very much down. And I have that recent, what was stupid support, but it's just a trend line basically. Cuts through the breakdown and now is resistance, the area that I'm going to be keeping an eye on. My most important index that I follow, though, is the NASDAQ. Actually, it's the IBD 100 and IBD 8585, which is going to be right here. Let's see if I can pull it up for you guys to show you how that looks really quick. It's taking a little long, actually, because my computer's been up for a few days, and I think there was a scan going. IBD 100, let's look on the weekly. You can see that it was down 5.65 on the week. That is a very nasty tumble. So that is almost wow, 4% decline for the IBD 100. Volume was lower, but the relative strength line ticked up a little better to show you that it was overall better off compared to like the NASDAQ for the week was down 3.38%. NASDAQ was stronger, but then NYSE down 5.62%, and the S&P 500 was down 4.99%. So the IBD 100 was able to tick up a little bit against it, not quite down 4%, as you can see. And even if you connected the lows there, you might have something. But you can connect this downtrend there, and then this huge downtrend. I mean, just everything is down and not good about it. Relative strength line just shows you how weak it is. On a daily, let's see how it did for Friday. See gains instead of losses. How a relative strength line even ticks up a little bit, but volume is lower. Next, let's go to the IBD 8585 index, which is very important to me also, as it's leading stocks. If you don't know how strong these things can be, as you can see, the IBD 100 in 2001 was actually, whenever it broke out here in 2000, we can go to the lows. In 2003, it was back at 100 where it was in 2001. So during that last end of the bear market in 01, 02, you can see IBD 8585 kind of went up a little bit to nowhere. Look at the relative strength line, super strong. Look at the relative strength line the whole way, super strong. And then from the lows to the top, just like the IBD 100, goes from 100 to 340. IBD 100 went to 380, 240% return for 85, 280 for the other one. As you see, as it goes down, even when it goes up here, look at it, kind of try to outperform. That's why we got DGLY, PDO, along with some other cancelums that tried to move, but they didn't. Yeah, the last move higher was October move. That was very nice. It really worked well for that 800. But look recently here. Look at the lines. Look at the relative strength lines. Not good. ID 100 is my favorite because it's more powerful. You can see when it opened up at 100, it went straight to 380. More importantly, though, look at the old highs in 2006 and look what it did in 2007. Relative strength line confirmed that. And then even in 2008, at the very beginning, whenever leading stocks went higher and were below the old highs, relative straight line made new highs. However, it was only like a couple of beautiful charts, and that's nothing else. Still, we had a lot of longs, though. They just didn't work out, as you can see. Rolling over, falling, dying. But look at the relative strength now on the uptrend. Same thing as 85.85. And, guys, that just shows you why I didn't have any 100% returns during this little market rally. Look at the last one. The last one was only good for 2 months. And yet I had DRYS. I had FSLR from back here that never did break whenever the market did. I had APPY. So what? Why? How? How did it get so bad? I don't know. It just is. And that just shows you that the downtrend is probably in effect and ready to go. I mean, look at from 03 to 07. How many red monthly bars do you see here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. To 2007, and then since then, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 already. 12 in a little over a year, compared to 1, 2, 3, 4.5 months, almost 5 full years, I mean, of just 20 down days. So it shows you how the market's acting. It's not good with the leaders. However, the NASDAQ does have on a weekly a slightly higher divergence recently, but overall from the highs to lows, as you can see, there's been a recent negative divergence. Still, at least it's pulling back on low volume. Overall, daily looks good. Let me show you the S&P 600. You see it's holding in there. Another bullish intraday support. Actually had an inside day, 254.93, 254.84. So it did have an inside day of the intraday session based on intraday basis to yesterday's intraday session. And it had an inside day based on closing and opening basis. That can be considered as kind of constructive, definitely. And since we're even holding on to the gains of 250 both days, past 2 days, is very, very good, as I can see in the S&P 600. Let me look at the weekly. You can see it was down 7.69%. Still a little bullish tail there at the end. A few more things before I go. Platinum down, oh my, almost a low a day close. Silver, of course, nice little consolidation. Looks like it's trying to form like a handle here of a very, very, very oddly shaped saucer with handle right here on a weekly. You can see it right here on this 2-day. Saucer with handle so far from an uptrend, so. But do indexes, do they have to be from 20% uptrend zone? I don't even know. Let's see. Doesn't matter because this one is very cool. And then let's do gold, and then we're going to end it with the last one. Gold looks mighty good. Wow, I don't even know why I didn't pay attention to it. But back over here was your, okay, so you guys need to know another new long day. Right here, it moved back over the 50-day moving average ever so barely, as you can see. You can do an initial long there, but let's say that that wasn't good for you because it was still making lower highs. The next day wasn't good. There's your buy day, and if not this day, definitely. 923.80, 924.90, close to a high day. And look at how it's acted since. So far, so well. Weekly chart of gold going back to 00 is beautiful. And right here after September 11th, I said, buy gold, buy gold. I told a good friend of mine that was a gold dealer, you should load up on your inventory here. You should just buy a ton of it because gold's going to go much higher. Yeah, well, I'm glad I didn't listen to myself. But whatever. It is what it is. I still believe gold's going to go higher if it can break out of this consolidation area. I don't ever like these really, but it's very quite possible that we could be having a reverse head and shoulders. And that's going to be good to see because whenever you see the reverse and head and shoulders, that kind of gets you a little bit more bullish because now we're going to look at what a real head and shoulders is. And look, I got it drawn already. Left shoulder, head. Probably come all the way out here on the head. Head, left shoulder, head, left shoulder. Here's a weekly. Look up close. Shoulder, my head, my right shoulder. Break down below that uptrend line. And the main line to watch for a breakdown to then really confirm it was there. You got that here. Boom, boom, breaks the neckline. Breaks the neckline after already breaking the uptrend neckline here. Boom. And now look at it, trying to get back above it, but it's got that and the 200-day moving average and the 50-day moving average is right above there also. So going to get rid of all these chart things. So dollar's got a lot of overhead resistance to work with in the short term. Hopefully get going. If not, gold is king. Aloha.